This is Marshall Gittler, Head of Investment Research at FXPRIMUS, bringing you my North American opening market comment for Wednesday, June 8th. There's not much action this morning in the FX market. The dollar has recovered a bit against sterling, but keeps falling against the Swiss franc. And now in my European opening comment, I already discussed the North American indicators that are out today, the Canadian housing starts and the weekly U.S. oil inventory data. So now I'd like to focus on the news that will be coming out overnight. The big event will be the Reserve Bank of New Zealand, the RBNZ rate decision. There's a lot of disagreement here. The economists polled on Bloomberg are split evenly on whether they'll cut, while the market attaches a 40% probability to cut, which is also pretty evenly divided. What that means is no matter what happens, half the people will be surprised. Half will have to sell if they cut, while the other half will have to buy if they stand pat. So we can expect some good volatility no matter what happens. Although inflation is below target, the New Zealand economy is doing well. Rapid population growth and low interest rates are fueling domestic demand. Strong demand for housing is supporting the construction sector, and the government's planned increase in infrastructure spending will boost it even more. Tourism is supporting the service sector. Dairy prices are up, and unemployment is down. Except for inflation and the currency, things are generally going in the RBNZ's direction. And even inflation may turn in a few months if the recent rise in oil prices holds. In my view, I don't think there's been enough bad news since the last rate cut in March to justify moving again. I expect that they'll remain on hold, which may see the New Zealand dollar firm somewhat. China announces its inflation data overnight and is expected to see a further slowing in consumer price inflation. This is probably due to slower rises in food prices. The producer price index remains in negative territory. However, the pace of decline is slowing, meaning the downward pressure on goods prices in China is slowly abating. I believe the Chinese producer price index is more important for the rest of the world than the consumer price index, and therefore the slowdown in deflation there should be good news for risk-sensitive currencies such as the Australian dollar. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.